Hello, my name is Earl Aycock Jr. And today I will be talking about understanding underlying insurance, retained limit, and the application of the self-insured retention on a personal umbrella policy. As a good personal lines agent, we should always offer our clients higher limits of liability insurance so that they are better protected against the likelihood of a catastrophic liability claim. One of the best and least expensive ways to offer these higher limits is by providing a personal umbrella liability policy. In offering these policies, we need to be aware of a very important requirement that must be met, and that is the maintenance of underlying insurance. Personal umbrella policies offer millions of dollars of coverage at very competitive rates. And one of the reasons that they can be as inexpensive as they are is because the umbrella carrier can count on the underlying insurance carriers to pay most claims, as well as to defend their clients through the claim's ultimate resolution. Because of this, umbrella insurance carriers will require their insureds to purchase and maintain underlying insurance that will provide the primary coverage and defense for most claims. This underlying insurance requirement will spell out the types and amounts of coverage required by the umbrella carrier and may even be shown on the umbrella policy declarations page. These underlying coverages must remain in force throughout the umbrella policy period. Another important provision that needs to be understood is the application of the self-insured retention, or deductible. Different carriers may call it one or the other, but in essence, it works the same way. So when and why do we have a self-insured retention on an umbrella policy? Well, let's think about it this way. A good personal umbrella provides two primary functions. The first primary function is it will provide higher dollar limits of liability coverage in those cases mentioned earlier when a client sustains a catastrophic loss. For example, let's say one of your clients has a tragic auto accident resulting in critical injuries to a plastic surgeon, who because of the accident can no longer perform his surgeries. His damages could well exceed the limits of your client's personal auto policy. The umbrella policy would pick up coverage after the exhaustion of the personal auto policy to provide those higher dollar limits needed. In this example, the personal auto policy would be one of those required underlying insurance policies mentioned earlier. The second function of the personal umbrella policy is to provide primary coverage for claims that are not covered by the required underlying insurance policies, but that are not excluded by the personal umbrella policy. One of my clients recently had one of these claims. My client had rented a vacation home at the beach, and one night their young son turned on an upstairs faucet to wash out his bathing suit, but he failed to turn off the water. The resulting water loss to the floors in the home was around $70,000 and was not covered by my insured's homeowner's policy's liability coverage because of an exclusion. The good news for us both is that the personal umbrella policy did not exclude this loss, and so it was covered. Whenever you have a claim like my client's claim that is covered by the personal umbrella policy, but that is not covered by the underlying insurance policies, this loss would be subject to the self-insured retention. In personal umbrella policies, the self-insured retention is usually a small dollar amount, such as $250 or $1,000. Please note that the self-insured retention is not applied to claims that are covered by the underlying insurance, or that would have been covered by it if they had been properly enforced as required. It is only applied to claims where the umbrella drops down and provides primary coverage for these broader coverage claims, like the one I had. And now we need to understand what the policy means by a retained limit. The insuring agreement for the ISO personal umbrella policy says that it will respond to damages in excess of the retained limit. Well, what does that mean? This retained limit is simply defined as either the total dollar limits of the underlying insurance or the self-insured retention. In other words, this retained limit must be met before the umbrella carrier pays for its covered damages. And the retained limit, therefore, is met by either the underlying policies paying their respective limits first, which responds to that first function I previously mentioned with the plastic surgeon's injury, or by the insured paying their self-insured retention. which responds to the second function I mentioned with my friend's water damage claim. Finally, just a word of caution. Umbrella policies vary tremendously throughout our industry and may use different terms and definitions than those that we have just discussed. Although the terminology may vary, they should work very closely to the ways that we have discussed today. As good insurance professionals, we need to understand the differences in the umbrella policy we offer so that we can better protect the unique interests of our clients. Good luck.